Hey guys, what up? In this video I want to talk about USDCAD. Today is Sunday, and as you can guess, forex market and stock market, they are all closed. The only market that is open is crypto market, cryptocurrency market, and Bitcoin price is at 35k, and there's crypto market is not promising right now, but for holders they have to wait and see what's gonna happen. Okay, I have USDCAD in front of me, and I wanna talk about it. Let's start with the weekly time frame. You can start with monthly time frame, doesn't matter. And as you can see, in monthly and weekly time frame, we have this trading range here, and in this trading range, like any trading range, we expect to see a reversal at the bottom and at the top, which is a good strategy for traders to buy at the bottom and sell at the top. And investors also, if you're a long-term investor, you can trade in time in long time frames, in big time frames, and yeah, even if you're an investor, doesn't mean that you don't need chart anymore. It's not right. Even if you're a fundamentalist, you still need chart, because it's much easier if you check out the data with chart rather than I don't know, statistical data. It's much easier. You can realize what are you dealing with in a second, just a glance you can figure it out. Okay, let's check out weekly time frame, and as you can see, I determined and trend line for this. You can check it out in your time frame. When this bottom formed at that point, I remember I was kinda doubt that if it's a trading range or bear trend or bull trend, but now we can see a reversal here. It's a minor reversal. We can say for sure that it's a major reversal, but yeah, I think with this signal bar here, we can conclude that it's gonna be a reversal. It's gonna be a reversal at this trend line, and it's gonna be a bull channel or just a bull trend. So it's not hard trading bull channel or such a thing. It's a bull. If it's a bull channel like this, you can trade. You can buy at bottom and sell at top. You can also sell it, take the sell positions, but its probability is less than bull position. But as you wish, there's no right or wrong for that. And as you can see in this daily time frame, you see this big strong and good looking reversal bar, which we call it entry bar or give up bar. Why give up bar? Because this candle kind of show us after this trading range here that it probably represents that bears, the dominant side of the market, they give up, and now we expect bulls take the control of the market, and we expect to see a bull swing here. And as you can see, I set an order here. I said, okay, it's a trading range, and when price hit this trading range, hit this top, I want to enter the position. And yeah, I set stop order, and yeah, as you can see, I'm in the position, but now market is closed. It's just remain at this price. Should just wait and see till tomorrow and Monday and see what's gonna happen, what will happen. So you enter this position. What about your target, and what about your take profit? If you consider this as a bull trend, it depends on, you can put your take profit at this level, at higher levels, I don't know. It's up to you, but let's be more greedy, and I hired I take profit. And about your stop loss, yeah, I think it's okay if you just put it below this trading range, and that makes sense. And let's check out the risk to reward ratio. If you want to increase the probability of your position, you need to sacrifice the R to R ratio. That's how it works. And if you want to have a good R to R ratio, you have to sacrifice your probability. Doesn't mean that you have zero probability, but it means you actually have to decrease one of these variables. Basically, we have two variables in financial markets for traders. We have risk, reward. You can consider this together. Risk. Okay, that's not good. Risk. Reward. You can consider this as a one variable. And probability. probability means okay, if you wait for more confirmations and more signals, you actually increase your probability. For example, if I waited for more breakout bars and I set my position, set my order at this level, for example, I would increase my probability, but my risk to reward ratio would be worsened. Like this, if I consider stop loss at this point and in my entry price here, as you can see, my risk to reward ratio worsened. But on the flip side, I actually increased my probability, because if price could make it to reach at this price, it's probably that we see the price at higher price. And the opposite is true. The opposite is also true. If you wanna have a good risk to reward, you have to decrease your stop loss, and when you decrease your stop loss, you actually take more risks, and you actually decrease the chance of winning, because who knows, maybe after this breakout we see a pullback, or it's just stop hunting or fake breakout. We can't say for sure, but if I wait and enter the position at this price, it's more probable for trend resumption, for trend reversal, bull trend. Okay, so you have to choose between good R and R to R ratio and probability. You can't have your cake and eat it too. And yes. Okay, I hope you enjoyed this video. In next video I will talk about this risk to reward ratios and variables more, but for now I think that's enough. Okay, let's check out the lower time frames. Sorry. In our time frame we had this trading range, and you could trade it as the trading range, buy bottom and sell high. And now, what about now? You can just copy paste this trading range, and voila, that's your target. If you wanna buy this share in lower time frame, in 4 hour time frame, you can also consider this, and we're probably gonna have this price. If it goes up, it's probably gonna have a pullback here, because many traders as us, they also know this stuff, and they will consider this target for the position if they enter the position. And yes, in this time frame, as you can see, we had this trend line, and we had this breakout above this trend line. We also had at this point breakout here, but it was at the at the middle of this channel, and it was kind of a head and shoulder pattern somehow. But here we have this trading edge and stuff, and yes, it's possible you see a trend reversal here. You see this good follow-throughs, these big candles, except this one, and we had this first leg here. It was strong enough that we get this idea that after this pullback we expect to see the second leg, and it happened. And let's see how many pips you can get. We basically, when we have a trend resumption, we put target at the starting point of this trend, on condition providing that there's a opposite trend right after this previous trend. We usually see a trading range after a channel, as you can see here. It is also a sign of trend reversal. This is a double bottom, as you can see here. And if you enter the position, we consider this as a swing level. When price cross this this last top, we say okay, it's a trend reversal, and if it doesn't, it's a trading range. If it just range below this level, we consider as a trading range. You can make 390 pips if you take this position, and it will take like a year. Crazy, right? No, sorry, it will take like a month. I think that's a good trade. You make this money in a month if you consider each pip as $1. It's like 390 dollars, which is a good money. It's a good money, and yes. Okay, I hope you enjoyed this video. If you have any suggestion, you can share it with me always, and put your comment below this video. Bye for now.